Welcome everyone to the Eat Well presentation. My name is Daniel Brody. I am a director of the company and one of the co-founders. So today we're going to be talking about our business plan, what we've accomplished to date in a very short period of time, where we're going over the next few months, and then also more importantly, where we're going over the next few years. So to start off, we are a plant-based food investment company, and we are building a platform that can feed families globally for years to come. We've made 3 acquisitions in the last 9 months, and we have a very, very aggressive growth plan going forward that includes many exciting catalysts, such as a US listing in the near future. We're focused on the whole value chain. So we're not just investing in one area of the plant-based food market. We're investing in agriculture. We're investing in food tech. We're investing in CPG. And the reason we're doing that is because all 3 of those aspects contribute majorly to global food security. And it all starts with the plant, right? At the end of the day, it starts with that pulse crop that we buy from 3,000 farmers. We then process that pulse crop through our investment in Bell Pulses. And that goes all the way down the value chain to the end consumer, right? Those products end up in Beyond Meat, in Impossible, at Ingredion, some of the largest companies in the world. And the goal there is to make sure that ultimately we can help positively contribute to how we're actually going to feed 10 billion people by 2050, right? We got a massive jump there. We have to increase our food supply by 70% to feed that many people by 2050. And it's mathematically impossible to do that just from animal agriculture. So plant-based foods, that is the place we are betting on. That's what we're focused on. And we think it's the most sustainable approach to the future to really help with global food security. I'm going to touch on a couple of points here just across the market to make sure everyone's up to speed with some of these kind of theses behind why we've made the decisions that we've made. So here's a couple of key trends for you in alternative meat. So number 1, plant-based meat is still growing at 5 times faster than total food sales overall. And my favorite stat here is 95% of people who order Impossible burgers regularly, they also consume animal products. So these aren't just vegans or vegetarians. These are people that consume all different types of food. So for us as a company, that was a big indicator in the fact that we're not just applying products towards the plant-based market or the vegan market. These are for all consumers, right? So that's now a very, very big market. And that's the reason it's growing so quickly. This is the reason you see it being adopted in all types of different stores, from Tim Hortons to Subway to Burger King. All these stores are launching plant-based food products left, right, and center. And you can see why, right? The soybean, the dry pea, lentil, you have up to 60 times more protein per acre than a cow. So when it comes to feeding 10 billion people by 2050, you can see why this is such a more sustainable option for us to get there. I just love this chart because it just completely puts it in perspective. And guess what? It's actually better for you, right? The average vegetarian lives 8 years longer. The average vegan, 15 years longer. You've got lower cholesterol levels, reduced body weight, reduced BMI, and many types of cancers reduced as well. So we are set on plant-based foods as an investment company, and this is how we're doing it, right? Like I mentioned, we focus on agribusiness, we focus on food tech, we focus on CPG brands, not just a singular aspect of the value chain. And this is what our investment portfolio looks like. So we acquired 100% of a company called Bell Pulses. That created our agribusiness division. We acquired 100% of a company called Sapentia Food Tech. That created our food tech investment division. And we acquired 51% of Amara, which is literally one of the fastest growing plant-based food baby food companies on the market. We invested in them by acquiring 51% of their outstanding shares. We've got the option to go up to 80%. And you can see here as well, we own 100% of Eat Well plant-based food alternatives. That's going to be our own in-house brand that we are launching soon. We paid $30 million for Bell Pulse. We paid $8 million for Sapentia, and we paid $11.6 million for 51% of Amara, and our 80% option is for an additional $29 million payment. So this is a little bit about each company that we've put into our portfolio here. So number 1, this is Bell Pulses. This is one of the darlings of the Saskatchewan and North American agricultural industry for that point. Bell's been around since 1978. It was started by the Gaudet family. taken over by the kids later on, and they have just done such a remarkable job of growing this business. It did 60 million in revenue in 2020. We forecasted 60 million of sales last year for 2021. We're just waiting on our financials to come out shortly here. And again, this is a very unique company, because what they do is they take the pulse crop from 3,000 farmers. They don't believe in buying, they don't believe in farming, but they believe in the processing side of the equation. So they take the peas from over 3,000 farmers and they process them, they split them, they dehull them, and then we sell that to all the leading companies around the world, Beyond Meat, Nestle, Ingredion, etc. So that's the agricultural division. And again, it's been around for 40 years. 2021 revenue, 60 million was forecasted. And we've got a lot of proprietary technology in there. And one point I just want to hit on, because it is related to food security, the fact that Russia and Ukraine has heated up here. I mean, we've had to expand production overnight. Literally in April, we upped our production from 93,000 to 115,000 metric tons with Bell. And I say we because I feel like we're part of it, because we own 100% of the company. But that's a big production jump for us to do overnight. But again, phones at Bell are ringing off the hook, trying to secure food for all of these different countries and companies. It's been remarkable how much demand we've seen from Bell. Next up is our food tech. So this was a company founded by Dr. Eugene Bortone, who literally invented the Twisted Cheeto, which did about $2 billion in sales in their first year. So absolutely remarkable food scientist. And he was tired of selling Cheetos and making unhealthy snacks. So he decided he wanted to create a healthy plant-based alternative that looks like, I'll come back to what it looks like, but this is the snack food market. It's just a massive, very quickly growing market. But this is what our first products look like, right? We've got these protein twists. We launched in white label to start, Suspensia launched white label to start. And that can ultimately act as a very strong part, like a very strong way for us to start, right? We launched in 350 stores. We're already talking to Federated Co-op to go to a whole bunch more. And then again, expanding through our own products, Eat Well products, which are going to be announced soon. And that allows us to test the market and make sure people like the products, right? We test the market first, make sure people like the products. And lo and behold, what's happened now is the fact that these products have won finalist status at the Canadian Grand Prix New Product Awards. So they've now been validated, and that's just an incredible testament to the team and the product and everything that we've invested in with this company. So just want to stress that. And then I have to point this out. I mean, this is how they stack up against the competitors, right? You've got same serving size, but you've got 21% fewer calories. You've got 61% less total fat, less saturated fat, less sodium. You got more carbs, but look at that fiber, right? Look at that protein, 236% more fiber, 180% more protein, and a 2.24 carb to protein ratio, which makes these not just less bad for you, but actually good for you. So that's kind of the idea behind Suspensia, and why we invested in them, why we acquired the business, is because we know how fast the snack food market is growing. We know now that we have excellent products. Now it just comes time to get those products into more hands through broader distribution, new white label brands, and then our own in-house brands. So that's a very exciting one, which leads me to Amara Organic Baby Food. This is our CPG investment, or consumer packaged goods investment. Amara is one of the fastest growing baby food brands in America. Can't wait to put out our financials on and have some information on Amara included in there. But we bought 51%. Again, this closed late last year. We bought 51% for 11.6 million and have an option to go up to 80% for another 29 million. But you can see the products are just everywhere. Amara literally cannot make them fast enough. They're available on Amazon, Walmart, Costco, Sprouts as it is now. And this is what they look like. They've got these two main products here. The first one is like an oatmeal. You can mix it with formula, breast milk, or water. And then the Amara Organic Smoothie Melts are just the most delicious snacks that you could imagine. We always joke about it in the boardrooms, but they're made for babies, but it ends up being us, the adults, that eat them at all our meetings. But incredible products, and they're just selling like crazy all over the place. Zero added sugars, thousands of reviews, all plant-based. All the mummy blogs are picking us up as well. You can see us on Lucy's list and what to expect. Best new products. We just got ranked in Business Insider, the #5 fastest growing direct-to-consumer e-commerce brand in America for Amara. And that's not just plant-based. That's all around. That's all product categories. We're very pleased with that, and very excited for the company and how fast they're growing. So you can see it here again, just all over the place, new distribution into all these new stores, and you can see it: Whole Foods, Amazon, Walmart, Giant Eagle, HEB, Sprouts. It's pretty much getting everywhere. We just launched on Target.com as well, and it's all female-led, female-founded by an incredible team. So if you bring it all together, what Eatwell does is it encompasses almost the entire value chain, right? We're not farmers, but we certainly do processing. We have our white label division, our CPG brand that we invested in. We've got genetics with IP there as well. So that's kind of how we stack up against the competitors, but we're really trying to invest in a broad range of companies that covers the entire value chain to de-risk the investment for anybody that comes into Eatwell, right? You can access the whole value chain by investing in just us versus some of the other competitors out there. And this is our path to 100 million in revenue this year. So we had always forecasted 60 million from our investment companies in our portfolio, right, to do that 60 million last year. So we're going to report on that very soon. And again, a stable revenue forecast for Bell Pulse. It's a 42-year-old business, stable growth there. But Amara is cranking. We've got 5 times year-over-year growth for Amara, 640% increase in online sales, 1,500 new stores launched in 2021, way more planned for 2022. So that's going to be growing a lot quicker than Bell Pulse on a percentage basis. And then same for Sapentia, right? That's a new product launch. And the goal there is to commercialize products not within 12 or 18 or 24 months from acquisition or investment, but fairly quickly, right? We helped Sapentia launch those products in about 5 months after we made our initial investment. So that's one of the value added benefits to Eatwell. Now, next up, our team. So we've got one of the most well-rounded teams managing this investment portfolio out of any company out there. Of course, I'm biased, but I'm a co-founder and director, so I'm allowed to be. But we've got Mark Anid, president, CEO, director, Mark Coles, Barry Dodato, and Patrick Dunn. Absolute expert group of guys. Mark Anid is a CPG expert. He's been doing it his whole life. He's taken brands from as low as 20 million up to as high as 750 million in retail sales. We've got Mark Coles, who is a veteran CPG executive as well, also very strong on the investment side. He's run many family offices before, and he's been absolutely instrumental in helping Eatwell close these deals where we've been able to acquire these companies for investment purposes. Same with Patrick Dunn and Barry, all part of the original team that helped put everything together, but just a stand-up group of guys. The team that I just showed you there, this was the last project that we were involved in. So we built a very large scale, 200,000 metric ton plus per year processing facility. So this was on the fractionation and milling side, but this was conceived, built, financed, and invested in by key partners of the Eatwell team. And this company was sold to Ingredion in 2020. Ingredion is the largest ingredient supplier in the world. We've got myself, Daniel Brody, director, some fellow directors of mine, Nick Demary, Nick Grafton, Desmond Balakrishnan. Again, very well-rounded, very strong on the capital markets team. I've helped raise over 750 million for 5 early stage companies. I'm 18 years as a vegetarian as well. So I believe very strongly in this space that we're building out, and this company for personal reasons as well as business reasons. But I think we've got a very strong board. We've got good independent directors on there as well. And we are very committed. And that I'll show you how committed we are on our cap table after I touch on some of our advisors here. But again, these are some of the top guys in the plant-based food world. They would not be putting their name on our company if they didn't believe wholeheartedly that we could execute on our business plan. So first of all, top left, we got Prince Khaled. He's one of the largest, most spoken guys for animal rights, for plant-based foods. He's the founder and CEO of KBW Ventures, which is one of the largest plant-based food investment companies on the planet. This is the only public company that he sits on the advisory board for. So he's an incredibly well-rounded person. We're so thrilled to have him on the team. Jeff Dunn, again, very strong advisor for us. I mean, Jeff's he's at Butterfly, right? $25 billion private equity firm in California. And then the other big one is Bolthouse Farms, right? He's CEO at Bolthouse Farms. So I think everyone's probably had their carrot juices and different products like that at the grocery stores. Dan Prefontaine is known as the godfather of plant-based food. He's helped over 300 companies launch 800 new products. He's got his stamp on a whole bunch of the most well-known plant-based food products, including some of the Oatly Milks, the Beyond Meat burgers, Impossible, all those companies. So he's again, great guy to have on our team. Eugene Bortone, I mentioned him already. He's the founder and CEO of our food tech investment, Sapientia. Have to point this out, but I mean, if you look at some of the comparables with what the revenues are for our investments right now, we're literally trading at 4 times less than the average better for you name out there. So we're focused on spreading the word, which is part of the reason I'm doing this presentation. I want to get the word out there as much as I can to everybody that'll listen to what we're doing to try to help close that valuation gap, right? Even if we close that gap by 50%, you'll see a strong move up on our stock price there. So very important to note, we are quite undervalued relative to our peers. And this is what I meant when I said we're aligned with shareholders, right? Management, insiders, and strategic investors own almost 70% of the stock on a basic float and almost 80% of the stock on a fully diluted level. So we're very aligned. We've got millions and millions of dollars of our own money invested, and that cap table right here shows that, right? We own the majority of the company ourselves. So we're looking to get the word out there as much as we can and try to bring in some more interest around our company, and like I said, work on closing that valuation gap. So with that said, that brings me to the end of our presentation. But before I wrap up, I just want to hit on a couple of our strategic investors. Number one is Nurture Healthy Food. So Nurture Healthy Food is it's a partnership between CFI Holdings and Afina International. So it came to us through a family office out of South America that wanted to help us get more distribution for Amara's products. So we came to terms for a great deal with them. They brought $5 million of capital at 75 cents per share, which has been very helpful to expand some of our production lines. Stratagem Capital, I can't disclose how much they invested, but it's a strong family office out of Canada that was the lead order for one of our previous financings. So again, very strong team there. They've got Joanne O'Connor running it, and then as far as board members go, they've got the Honorable Stockwell Day, Desmond Balakrishnan, Matt Cece, Gordon Flatt, Dixon Gold, John Waterer, and Graydon Flatt that are on that team. So again, strong groups investing in us. We've got such a well-rounded, unique investment platform where we're buying and we're investing in and we're acquiring assets all throughout the value chain, right? It's not just one or two aspects, it's all of those aspects. We've got a team that's had prior exits before. We've got a team with substantial experience managing investments, and we've got a company that's trading at less than 25% of the average better for you name. So as far as my presentation goes, I hope I've demonstrated to you we've got all the key ingredients to make this an absolutely massive success, including a whole bunch of upcoming catalysts, including our US listing, which we announced in November that we were working on. It's now May. So we hope to have news on that very shortly. So stay tuned for more. I hope you've enjoyed the presentation, and let me know if you have any questions. You can reach me at dbrody@eatwellgroup.com or our investor relations team at ir@eatwellgroup.com. Thank you very much.